January 25th, 2024. I think that on a day like today, an important thing to keep in mind is you have to know what reversals are probably going to end up minor and what reversals could be major. And I think, a lot of the more reasonable trades today were for minor reversals. Something like selling 13, it's a big bar and it's probably always in short, but this channel up was pretty tight. It was a wedge, it's true, it was 3 pushes up, but the channel up was pretty tight. So you know that the first reversal down is probably going to be minor. And that's why traders on 14, they saw below 13. They got a really quick 5 points on 14, and they just took it. And then the market got bought up. Kind of similar situation with 41. It's a good buy. It's 3 pushes down, and you're low in what is probably some sort of trading range day. But, how high are we really going to go here? When you start to get the rally, you have to be thinking about possible areas to exit, and you want to try and exit high on trading range days. And you can see we rallied to pretty much exactly the midpoint of the trading range, and then traders sold. And the reason being because, maybe we're going to get up here, but the reality is if you're long up here, you're risking, or so you're trying to make 5 or 6 points and you're risking 10 or 11 points. So the risk reward isn't all that good to be long up here, and you're in the middle of the trading range. So the probabilities are always worse than you want them to be. So, it's good to take these trades, but you have to keep in mind, they're probably minor reversals. They're probably not going crazy far. So, that's why a lot of traders scalp out of them. Bar one, a doji bar, but with a big tail on the bottom. Usually when you get a doji bar in the open, the day ends up being a trading range day. Followed through for the bears on two. It's an inside bar. You have a big tail on one. Now you have big tails on both sides of two. So I'm not really sure how much further down we're going here. And you get more follow through for the bears on three. But again, big tails on both sides. So what are you really expecting here? Do you think we're going to go that much lower? Not really, because of how big all these tails are. I had a couple thoughts on the day when we started. I thought that this was strong enough that even if we tested up higher, we were probably going to get another bear leg down, and you could argue this was the bear leg. So that was my main thought on the day. I also thought the gap up was big enough that if we did manage to reach the prior day's low, which we obviously didn't, but if we did manage to reach the prior day's low, there would probably be buyers, since traders who sold this close were hoping for a collapse, and instead we got a gap up, so they're disappointed. Bar four, it's a double bottom with one or a micro double bottom with three. Some traders might take the buy. Most trading range days have a double top and a double bottom on the open. So I don't really think it's all that great of a buy before. I'd rather wait for something higher probability. But, I don't know, maybe 20% chance it's the low of the day, maybe 30. Follow through for the bulls on five. Do you buy above five? I don't think so. I think buying above five is buying high in a trading range. It is by the close from 4 and 5, but you have to keep in mind this is probably a trading range. And when you're in a trading range, usually right after the market becomes buy the close or sell the close, it reverses. So okay to buy above 5 if you have a wide stop and are willing to scale in, but you have to be expecting disappointment, which you got on 6. Probably buyers not too far below 6. You can see we tested back down. So traders who sold to 3 close, disappointed 4 or 5, get out during 7 around break even. And then the remainder of the traders start buying back shorts, and you get a big bull bar on 8. 8, a good bull bar, important that it closed one tick above the high of 1. So it's a breakout, but is the breakout going to be successful? Bulls want a follow-through bar on 9, but I doubt they're going to get it because you can see here on 5, bulls needed one more bar to make the market clearly always in long. They failed. So on 8, bulls need one more bar to make the market clearly always in long. Are they going to succeed? Probably not. And then you get bad follow through on 9, which is relatively expected if you're buying above 8. What about 10? 10 is an inside bar and a potential swing buy. If you noticed on 10, so we got 9 and then 10 bounced up to here within the first 30 seconds of the bar and then sold off. So when it does that, what happened is the traders who bought above 8 were disappointed at 9 and they exited around break even during 10 and were looking to buy again above a bull bar. So 10 is probably a credible swing since a lot of the bulls who exited around break even will put their position back on above 10. If you buy above 10, what do you want? Well, it's low probability. You're hoping that maybe you're going to get all the way up to this 42 low from yesterday, since it was a bad sell signal bar, but it ended up going for a swing. But you're hoping you're going to get somewhere up here, but more likely you're going to end up getting disappointing follow through. And you get okay follow through on 11, but there's a tail on the top, so it's pretty disappointing. You were hoping for a much bigger bar, maybe something like this right here, closing near its high to potentially start a rally. And then you get a doji bar on 12. So any traders who bought the close of 11 or bought above 10, disappointed in 12 and exiting around break even during 13, and that causes the big bear bar. Now 13 is probably a minor reversal. We could easily get a couple legs sideways to down, but it's probably a minor reversal with how tight this channel was. And look how strong these bull closes have been so far today. 4 and 5 closing on their highs. 8 closing on a tie, 9 closing, or 10 closing near a tie. I guess these were closing near their highs, but within one tick is basically on a tie, very close to a tie. So a lot of really good bull closes today. So it's unlikely that we're just going to sell straight off. It's more likely that this is a minor reversal, which is why, like I mentioned, traders scalp out during 14. Traders sell below 13, disappointed 14. Some of them will buy back shorts at the market with a 1 or 2 point scalp. You have zero true risk if you sold below 13 and you exit right here. So it's still a profitable thing to do. So that's why traders exit, and that causes us to bounce on 15. But 13 and 14 were strong enough for another leg down, which you do end up getting another leg down on 16, closing near its low. We go below the breakout point, which is the 14 low during 17, and find buyers. A reversal up on 18, but not all that great. And a reversal back down on 19. So it's 3 pushes down, 1 pullback, 2 pullback, 3. So 3 legs down to the bottom of a trading range. It's kind of dangerous to be short down here. Traders know this, that it's just 3 pushes down. Maybe 30% chance, maybe 40% chance that we end up getting, a strong breakout to the downside here. So it's still technically always in short, but you're towards the bottom of a trading range, and this really isn't all that great. And traders buy back their shorts at the market during 19, and that's what causes 20. They're taking profits low. 21, follow through for the bulls, yes. Buy the close, yes. But this is a tight enough channel that's probably going to get second leg down. How far do you think this is going to go? Your 1-to-1 is up here. You think there's a 60% chance we get there before we get down here? Maybe, but it's pretty close. And, if you're buying above 21, there's something else you have to keep in mind, is that you're buying right smack in the middle of the day's range. You're literally buying the middle tick, the exact middle tick of the day's range. And buying the middle of the day's range on a trading range day is usually not a recipe for success. Bad follow through for the bulls who bought above 21 on 22. It's a doji bar. If you bought above 21, you wanted better follow through than you got on 22. Some traders exit, you get 23. So if you bought above 21, you now have a doji 22, 23, so bad follow through. And then a bull bar on 24, so 5 straight bull bars, good for the bulls, but really, not optimal. I mean, if you bought above 21, you wanted to see, consecutive multiple. You wanted to see a bar like 65. You wanted to see multiple straight up bull bars closing near their highs and a breakout above the high of the day and hopefully a measured move up. And you're getting bull closes, but they're really not all that great. And you're getting towards the top of the trading range. That was the measured move up I was talking about. And you're getting towards the top of the trading range, so it's not that good. Inside bar 25, but bulls buy it, and then inside bar 26, so an II pattern. Do you sell below 26? I probably wouldn't. I would wait for us to get a little bit higher in the range. Some traders might take it and they scalp out during 27. I assume bulls bought around 50% pullback. I think bulls will exit below 26 and wait for limit order bulls to step in lower. It's a reasonable place to exit. And this is the problem with this kind of trade, is a lot of times you just make a point or two and sometimes you're going to get trapped. So it's really, it's just not the best trade to take in the middle of a trading range. Traders buy the pullback 27, another leg up 28, but not quite closing near its high. And follow through for the bulls is disappointing on 29. You can see it pretty much just traded back up to around the 11 close, and traders who bought there were so eager to get out, they sold out a tick below. And additionally, 1 pullback, you can see it traded below, 2 pullback, 3. So we have 3 pushes up to the top of the trading range. And then you get disappointment. Obviously, any bulls who bought above here, hoping that we get good follow through, and instead bulls just end up exiting when they give up. They're disappointed in 30. In 29. And they exit at the market, causing 30. 31 does something interesting. You have this open gap here. So traders who sold, the close of 30, traders who bought below 29 and scaled in lower on 30 were not able to get out with a profit on their first entry and with an exit and break even on their second entry. Or I said that the wrong way around. But you can see on 31, we end up getting big follow through, and the bulls who bought below here are now trapped. So we get a couple strong bear bars. 30 through 32, they have tails on the bottom, so it could be a parabolic wedge. But it's a strong enough move that we're probably going to get a second leg. Doji follow through on 33, and then a low 1 short on 34. It's a low 1 in the spike phase, so I thought it was an okay swing sell. Maybe 40% chance you get a measured move down. Where the daily range is still really small at this point, and we could pretty easily double it. So I thought it was okay to take the sell below 34, even though you are selling low in a potential trading range. but I just thought it was strong enough 30 through 32 for a second leg down and potentially to get, maybe somewhere near yesterday's low. Follow through for the Bears on 35, but a tail on the top, creating your actual risk. So what's 2 to 1 of your actual risk? Where'd you have to risk, right? You would have had to put your stop right here, 1 tick above. And you can see that we ended up coming very close to that 2 to 1 of actual risk. Why are traders scalping out with 2 to 1 of actual risk? Because rather than 1 to 1, let's say, because 34 was a low probability trade. So when you get bad follow through 35, 36, you see 37 and it looks good, but the reality is it's a breakout below the channel, and you're probably just not going to get another big bear bar on 38. Some traders sell the close at 37, knowing that if we get a bull bar 38, they just get out, and then traders get out 38. Can you buy 38? Maybe, but this is pretty steep, so it's kind of hard to want to. You can maybe wait for a second reversal. You're probably going to get 2 legs sideways to up. Follow through for the bulls on 39, but not really optimal. And a lot of traders exited at the market after the close of 39, causing 40. And 41 does something really important. The traders who bought above 38 with a stop below 38 get stopped out on 41. So 41 runs stops and creates a lower low, and then is a bull bar closing near its high. So if you bought above 38 and held and got stopped out, and then you see 41, you're going to be thinking, oh crap, I'm trapped out. And that's exactly what happens. And so those bulls have to start buying, and they buy, causing 42. And then the big bull bar on 43 that I said went to the exact middle of the overall range. So not super ideal to be buying up here. Maybe a buy the close bar on 43, but if you buy the close, you can see those traders just scalped out during 44. A bear bar closing near its low on 45, you can probably take the sell. It's a broad bear channel today so far, right? So you're looking for trades towards the top of the channel line or the bottom of the channel line. And it's a broad bear channel, so you can sell below 45, hoping that bulls who bought for any reason are going to give up below 45 at the latest, and that's exactly what happens. So 46 is so big because bears are selling below, or bulls who are long for any reason are exiting below 45, and you get a big bear bar 46, trading to a new low on the day, and you find buyers. Inside bar 47 and reversal up 48, but not all that good. Inside bar is a low 1 short, and you're selling low in, what's probably a broad channel, so not that great. Bad follow through 48. You can see 49 gives those traders who sold a chance to get out of break even, which they take. Reversal up 50. Can you buy above 50? Maybe, but I think, this is a tight trading range, 47 through 50. I wanted to buy, something lower in the tight trading range, and we don't get it. Follow through for the bulls on 51, 52. Just goes back to the 45 low, which was a swing point, and then we get a reversal down 53. You can sell 53 for, probably a swing, but you're going to end up scalping out. You get a big bar 54, but big tail on the bottom, and you have almost zero true risk. So a lot of traders just end up scalping out with 5 points during 55. And if you notice, this whole thing through 56 is an overshoot of the bear channel. And so when you get an overshoot, a lot of times you're going to test the other side of the channel. And so you get an overshoot 56 and a reversal up 57. Bears probably exiting about 57 or 58, but bad follow through 59. This was strong enough to probably get its own second leg and will make traders hesitant to buy this high. 60, 61, good follow through for the bulls, but really not, just not ideal overall. We're probably going to find sellers at this 52 low. Why? Because it was a reasonable place for bulls to buy below 52, and they got trapped. And it's a trading range day, and generally trapped traders get let out around break even on trading range days, and that's exactly what happened on 62. Additionally, it's subtle, but if you look, the low of 32 has an open gap with the high of 40. So that made me confident that buying above 41, we're at least going to close this gap. So I thought we would at least bounce a little bit, and then we could see from there. So this gap is probably going to close, and you can see it does close 62, and then find sellers. Follow through for the bears on 63. It's essentially it's a low 1 short below 61, but not good. Obviously, bull bar. Bad follow through 62, 63, big tails, and big tails 64. Could be a wedge on a lower time frame. And then bull surprise 65, probably enough for a second leg up. You're hoping for more follow through on 66, and you get it. But what have bulls been doing? Pair of bull bars, pull back. Pair of bull bars, pull back. Pair of bull bars. What do you think is going to happen? Do you think we're going to continue to rally straight up, especially against all these big bear bars? Probably not. We're probably going to go sideways top. So disappointing follow through 68 and outside down 69. Really hard to stay short, or hard to stay long, after this. Reversal up 70. Do you buy above 70? Kind of hard to do, but some traders who exit below 69 might feel obligated to buy above 70, but you got to realize that you're now buying high in a channel, so it's not that great. 71 reversal down, but a tight pull channel. I wouldn't sell below 71. Maybe 40% chance of some sort of measure move down. But again, the channel's just too tight. Bad follow through 72. And any traders who sold to close 71, disappointed 73.2, getting out around break even during 73. Big reversal up, and you can see we ended up getting going up for the remainder of the day. I thought 10 was probably fine, but again, probably minor. You got to find a way to get out, probably with a profit here, I would think. I mean, as 13's turning down, you probably got to get out below 12 at break even at the latest. You can't just sit through it and take a full loss. Probably an okay sell below 13 and get out, maybe with 5 points, or maybe a little bit somewhere up here above 19, maybe, or above 17. I don't like buying 21. It's probably reasonable, but it's not for me. I thought 34 is a reasonable sell. It's probably sell to close 32, but kind of hard to do at this low in a trading range when you have tails. 38 is probably okay, but you're probably going to need a wide stop. 41, second reversal up, a lot better. You could sell 45 and 53. And I don't want to buy any of the rest of the channel up. It's 3 pushes, but I really just didn't think it was all that great. And on the daily chart, inside bar, high 1. We're in a bull micro channel. I was surprised at how well this ended up working. Maybe we end up going for a measure move up somewhere up here. Not super positive yet. But I could see us getting up here. We'll be interested to see what's above today's high tomorrow. So I would say tomorrow pay a lot of attention to the day's high and the day's low, because I think, it's an inside bar. So when we trigger above it, it's possible we get a violent reversal down and go outside down. And additionally, tomorrow is Friday, so I'd pay a lot of attention to the weekly chart. The open of the week was 48.85.5, which is only 40, 50 points away. So we could still easily get a bear close here, even though the week's near its high. It's just a pretty small week. So I would pay a lot of attention to that tomorrow. Low chance we get a big bull trend day tomorrow. It seems more likely. I'd be really interested to see what we're going to get at this high. If we get a reversal down from this high, then I think probably going to be an okay swing sell. All right, that's today.